Ladies and gentlemen, welcome back to the channel. We're going to go over everything you need to know about AMC stock for this upcoming week, what the data looks like, what my expectations are, as well as what's currently going on in our markets. What some people are pointing out could be limited upside from here in the broader markets, potentially some downside. Is that factual? Is that true? Is that what we are actually going to see happen? Well, we need to talk about it here in this video, of course. Hit that like button and subscribe to the channel if you guys have not done so already, and let's go ahead and get started. So first thing I want to point out is, notably, since 1997, you have never seen this, where during the Santa Claus rally, this is technically the Santa Claus rally period, you have not a single company reporting earnings. Not a single one. The calendar is dry. We've never, ever seen this before, which is a little bit strange. Now, take a look at this. The median stock return versus the S&P 500 return. S&P's heavily weighted towards big tech names. So the median stock compared to S&P 500 has not really done all too much. Like, literally is way underperforming. This takes you back to the dot-com period of time, 1989, 1999. So yeah, what set us up? What kind of happened following that? Well, the median stock returned over 15% more than the S&P 500 during the year 2000. And then the subsequent 1, 2, 3, 4, 5 years following it, the median stock outperformed. What does this mean? Money potentially going out of big tech into small and mid-cap stocks, into your average stocks out there that are trading at record low valuations. Small mid-cap stocks are trading at about 12 times next year's earnings, which is a number in which you have not seen in a very long time, when the S&P was trading at 19. Normally, it should be reversed, right? At least to some degree. Small caps trading at 1920, S&P trading at 1560. Not totally flip-flopped the other way. So that's important that I did want to point out. Right here, right now, the historical data suggests markets might outperform. At least the small and mid-cap stocks might outperform over the next even many years from here. And as you guys know, there is about $6.2 trillion in money market funds, which probably starts to head back into our markets in some capacity or another. Now, let's get into a little bit of AMC stock here in this video as well. You do have a short interest of free float, 8.96%. Nothing too hot there, nothing too crazy to talk about. $135.13 million worth of short positions currently in AMC stock. 1.09 days to cover, 22.15 million shares that are currently sold short, 13.76 million shares out on loan, cost to borrow 1.16%, utilization of 20.44%, and a short score of 49.68 out of 100. So the data really just does not look all too great for AMC stock right now in terms of legal numbers. I think the real numbers are hundreds of percents worth of short interest, but hey, what do I know? Now, if we take a look at the option activity that we seen on Friday in AMC stock, could be setting up for quite a Santa Claus rally. You did see 5 orders totaling $466,000 with a positive order value of 85%. So that was very abnormally bullish for AMC. Thursday was also very bullish as well, but the sheer amount of dollars that came into AMC options on Friday and the amount in which it was bullish, very unusual, I guess you could say, for AMC. Now, you do have volume on Friday of 68.5% calls, 31.5% puts. So definitely seeing, you know, more call activity than put activity as well there on Friday for AMC stock. I'm very curious, though. Let me know what you guys think down below in the comment section. Do you think the short position is really much higher than 9%, or do you think it's 9%? I'll actually run a poll on this channel as well. Go ahead and let me know if you believe those numbers that Ortex is reporting to us, or if you do not. Now, as I previously mentioned, the Santa Claus rally is, well, now, usually following Christmas into the first 2 days of the new year through January 2nd. The key takeaways: the Santa Claus rally is the tendency for the stock market to increase during the Christmas season. Theories for the rally include increased holiday shopping, seasonal spirit, and institutional investors settling their books before going on vacation. Like many market anomalies, the Santa Claus rally may be random with no future guarantees. Now, if you take a look at the Santa Claus rally itself, and what we've seen since 2002. Since 2002, there has only been 3 years that you've seen a negative return in the S&P 500. So like 80+% of the time, you're positive for the S&P during this Santa Claus rally period, the 7-10 days or so following Christmas. Especially in recent years, 2019, 2020, and 2021, as well as 2022, you've seen a positive return in all of those Santa Claus rallies. So this would be 5 years in a row of positive returns for the Santa Claus rally, if that also happens in this upcoming week. Now, what's a little bit different this week compared to other years? Again, we have no earnings scheduled to report. We also have basically zero economic data as well. For tomorrow, you have S&P Case-Shiller home price year-over-year, month-over-month, some bond auctions, house price index, Dallas Fed manufacturing index, the Richmond Fed Manufacturing Index on Wednesday, some more Richmond Fed data, Dallas Fed Services data, 5-year bond auction. I think the bond auctions could be the biggest, drivers of the markets this week, considering bonds were even closed on Friday. We'll see how bond investors are feeling. Now we're all the way to Thursday. You have initial jobless claims. I'll tell you right now, if you're a bear, if you think a recession is coming, if you're bearish, you're looking for the next short opportunity. I'm personally not. But if you are, you want to watch for initial jobless claims. Because what actually causes stocks to fall is recession fears, not the actual recession itself. So initial jobless claims is one of those very much leading indicators of our job losses spiking, are more people filing for unemployment. The more people filing for unemployment, the worse the economy is presumably getting. So we definitely want to watch that coming out at 8:30 in the morning on Thursday. Not expecting all too much. You do have wholesale inventories as well, month over month, expecting that to fall negative 0.2%. That might actually be some good news. Pending home sales month over month and year over year as well. And that is pretty much it for your Thursday. Now, for Friday, it's even less exciting. Really not too much at all. You do have Chicago PMI, which you did see a spike during the last reading in November. You're expecting that's going to fall back down to about 51 from where it was at 55.8. So really not too much that's actually going to move our markets. AMC specifically really doesn't have much news as well. There's really just not much going on this upcoming week, which is a little bit different compared to prior years. Now, option activity, that could definitely still have a role to play in whatever move we see with AMC. You do have almost 8,000 calls currently in the money, about 57,000 calls out the money, 11,000 puts in the money, and 19,000 puts that are out of the money. So if you do get a big move up or down, that could definitely, affect things. But big story with AMC is we continue to hit multi-year lows. Does that start to reverse as we head into, 2024? Who knows? But what I will tell you is 65% of large cap fund managers are trailing the S&P, but only 47% of small cap funds are missing the S&P. So there could be this year-to-date kind of catch-up effect that a lot of funds try to do, to catch up to the markets, right? Especially large cap fund managers. Because if you're not in Magnificent Seven names, your large caps probably didn't perform that well, whereas some small caps have really done well. Palantir up hundreds of percent this year. SoFi's done very well. Fubo's done very well. And those are just ones that I can name. Those are some of the ones I'm invested in that have done pretty well. So I do think this might set up small cap stocks for quite an outperformance here over the next, coming week or so, maybe even longer. So that's kind of what I'm looking at here for this week. We'll ultimately see. Now, AMC stock flirting with, again, new multi-year lows. The stock is currently at $6.06 per share. If you break into the fives, if this week is a slow week, if things just don't go as hot as maybe we're expecting, AMC stock is vulnerable to continue to sell off. There's basically everyone that's ever bought AMC is down on their buys, right? Down on their positions. So you could see tax loss harvesting as well. That could be a negative factor for AMC, just considering everyone that bought the stock is down on their position. So I really don't have high expectations this week. In between $6.50 on the high end, $6.50 on the high end, and about $5.30 on the low end would be my expectation. Now, good news is the stock is quite oversold. So in that case, you might be able to see a little bit of a bounce, but I wouldn't hold my hat to it. And the MACD is, well, pretty neutral, slightly curling down, so with a slight negative bias. Let me know what you guys think down below in the comment section. Still no announcement from Adam Aron. They're not going to dilute shareholders anymore. If that happens, when that happens, that's when AMC stock starts to really outperform. That's when I can get a lot more bullish on AMC here in the near term, but it's really hard until then to forecast any kind of larger rally. The markets are so fearful of this dilution right now, or AMC investors are so fearful of this dilution right now. It's really putting a lid on how much capital is coming into AMC stock. So let me know what you guys think down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.